Charles Savage, Chief Executive of the Purple Group today. Half-year results to the end of February. Charles, we don't often talk to CEOs on results and even less on interims, but Purple is very close to the hearts of the BizNews community, and also being one of the few exponential companies in South Africa, we pay a particular interest in how you're progressing. Just to look at the top line, 36% growth in revenues, that is very firmly in the exponential camp.
Yeah, Alec, I mean, personally, thanks for the interest. It's so lucky that you guys are big followers, part of the tribe, I think you said. And yeah, 36% is, the result is really good. It's slightly muted, and I think hopefully that comes across in the results, in the sense that trading activity, investing activity, I don't want to use the word trading, investing activity was lower in the 6-month period than the previous periods. But actually, it's returning to levels that are more commensurate with investing activities and with markets that are more stable. In 2019, 2020, and 21, the COVID effect saw people investing at higher levels. So we're very, very, very happy with the result. And I think if you look at the key performance indicators, they're all really strong.
Just explain that, if you would, the COVID effect. Were people sitting at home and trading?
Yeah. So, well, look, firstly, let's define trading. So when we look at competitors, trading activity is generally someone who turns their portfolio over more than 5 times a year. So the average activity we saw in COVID was that people turned their portfolios over 1.8 times during COVID. The more stable kind of turnover values between 70% and 100% portfolio turnover, and that's what we've gone back to. So essentially, the activity is about 50% of what it was in COVID. And I guess there were two reasons. One is we were sitting at home, we had more time, but two, there was so much more volatility. I mean, just think about Sasol and the opportunities that it brought and lots of other shares like it.
When we look at Purple Capital and particularly EasyEquities, because that's really the driving engine, the thing that often impresses me is the way that you're continuing to grow your client base at very, very low cost per client added. How is this being achieved? Because I see once again you got it. You got that right in this quarter. You got just under 1 million now funded retail accounts. So I presume that's people who've actually opened accounts and gone through all the FICA and actually put cash into them.
Yeah, exactly. So that's at a funded account level, which means, Alec, if you've got 2 accounts, then you'd be counted twice there, because obviously TFSA, ZAR, USD, and Aussie accounts. On average, people have about 1.2 accounts, so there are about 750,000 unique investors. And as you've rightly kind of noted, the magic is in the acquisition cost and the fact that we keep accelerating our growth, but reducing our cost of acquisition. First point. The second one is we're not only reducing our cost of acquisition, we're also substantially reducing our cost of servicing this customer base, which means we're getting more leverage over our cost base, which is going to give us higher margin in terms of the profits that we'll make from this customer base in the future.
All about scalability, all about exponentiality. Keep growing fast. Have a base that means that each new client that you add, it doesn't cost you more to include them. I guess that's the story, isn't it?
No, exactly, and that's how these exponential companies are built. The infrastructure has to scale, and the only way you can tell we're scaling is that the costs are coming down. I think the one point that doesn't necessarily come across well in the results that I'd like to get across is you've got to remember that 80% of the customers arrived in the last 2 years, and they are at their lowest economic value to us right now. If you think about a customer who arrived 7 years ago when we started, their economic value is 10x what they were 7 years ago, because they add assets every single year and the market gives them a natural return. So the income statement is sort of crowded out by the recency of when our customers arrived. So I think if people look through these numbers and they focus on the assets that are arriving, the customers that are arriving, the cost of servicing those customers, and the cost of acquisition of those customers, and then just project a business that kind of 10x's itself over 7 years by just keeping its customers.
And that 10x is very real for you?
They are very real. I mean, I get goosebumps when I say it out loud. It's crazy to be able to say that, all we need to do is keep our customers and keep their assets coming in, and the business 10x's itself over a 7-year period. Those aren't our dreams and aspirations. We want to be much bigger than that. And I think the real test in the next 7 years isn't whether we can keep our customers, it's whether we can replicate our success somewhere else.
You again looking at the report, you are looking at two very interesting countries. Tell us about Kenya and the Philippines. Why those two, and the progress there?
Look, Kenya is probably the fintech capital of Africa. If you look at the success that they've had with payment wallets, Safaricom, M-Pesa, etc. So we've been putting down partnerships there for 2 years. COVID kind of intervened and stopped us launching. I'm going to be in Kenya first week of April. Can't wait to get there and kind of solidify our partnerships and get real about when we're going to launch. And it will be this year in Kenya. So very excited about the market opportunity, and personally think that we'll run our African strategy out of Kenya. I think we're too far away from Africa here in the southern tip. And then Philippines was opportunistic. It was an opportunity that was brought to me, and I looked at it very closely. I hadn't looked at it before. 110 million people, no competitors in the marketplace, scaled fintechs that also are in the payment space, sort of the equivalents of Alipay's. And I've just come back from a week there, blown away by the market opportunity, and literally we'll be on the ground and set up by the 1st of July. That's how excited we are about the market opportunity that's presented there. So, two new emerging markets for us to prove ourselves in. We've still got Australia. Again, COVID's given us lots of excuses about why we haven't done more in Australia, but those excuses have to start to disappear now. COVID's clearing, and we'll get about building a business in Australia as well. So, lots of irons in the fire in terms of new geographic regions. And the last point is that new products coming, fast. We'll launch our life insurance product in the next quarter. We'll launch Easy Crypto version 2, which is a dedicated platform for crypto assets that lives outside of EasyEquities, but will be available to our entire community. And then a credit facility against your shares so that you can borrow money and buy more shares, or alternatively go and buy assets like deposits on houses or cars or etc. So we don't want you to sell your shares to go and buy other assets.
That's an interesting diversion to start lending against the equities. Is it not high risk, given that many of those 900,000 accounts, or 750,000 people who are with you, would be, I won't say punting, but would be looking at maybe the higher risk opportunities when making their investments?
Yeah, Alec, I mean, good question, but I think the context is that competitors who give leverage or gearing tend to give it like 400 times, 300, 400%, not times. We're giving less than 30% loan to value. So really, it's a very low cost of lending. And the reason we've built it like that is to ensure that it's not for speculators. What we're seeing is that customers who've built assets with us from the age of, let's say, 28 to 35 are now wanting to take a deposit on a car or a house or an education product for their kids. And what they're doing is selling their productive assets to do that. And we don't think that's the appropriate thing to do. We think that if they can use their portfolios to buy a house as a deposit on a house, then we should lend them the money at a very low cost of capital. And that way help them build wealth by giving them low cost of capital to buy assets that give them a higher yield than the interest cost of that capital.
Are you partnering there with Capitec or Discovery Bank? I mean, they both they're both your partners. Which one, or are you
Yeah.
doing it yourselves?
No, so we don't have the balance sheet. I mean, to do that, we're partnering with banks. So I won't say who, but we've kind of put an RFP out to the banks to say, what's the cost of capital, and how much capital will you give us? We've secured 2 billion of funding, a line of funding already, and that's enough for us to run the first phase of the project, which will go live sort of last quarter of this year. And then we'll see. We're going to trade very cautiously with the product. The initial loan to value will be 15%, not 30%. So very low uh, uh, leverage. The other insight that we've got is that most people withdraw money and then the money comes back. And again, they're creating tax events and costs, so we don't want them to do that. So, very excited about the lending product. A lot of our customers have got lending, they've got credit cards, and they don't need them. They've got these assets sitting with us. They can get an 8% cost of capital from us as opposed to paying a credit card provider 16%. So, yeah, it's an exciting product, but we're going to do it very responsibly and very slowly.
But it could be a significant product very quickly, really, because if you've got over 35 billion now in assets, or you're looking at it in that way, so you'd say this is a potential 10 billion lending book.
Yeah, that's exactly how we're looking at it. And if you think about the products that we've built, and let's talk about equity trading, it's such a low margin product, like 25 basis points. That's it. You're in lending, we've got a much higher margin rate. So we're going to beat up the banks and get the capital at the lowest cost. We're going to take a fair margin and then price it to our customers. And so, if you're making 1.5% on a 10 billion rand book, it's a number, and that's exactly what we're going to go set about starting this year. And it's a very exciting product for us because we can see our customers require this, and we know that they're lending money at 2-3 times the rate that we'll be offering.
Crypto is very exciting. Interesting to see that you've now moved on the 49% that you don't own of Easy Crypto. Just take us through the history there.
Yeah, so it was such a fabulous partnership that we struck with Michael Jordan and Earl Loxton, and they approached me. I think it was 3 years ago now, and said, "Look, we've got this great product in EC10, which, as you know, is that index of crypto coins." And they said we've got no distribution, and we struck a deal where if we built distribution for them, we got 51% of the company for free, which is what we wrote up in our year-end results. And now the 49%, it's come February, the business is continuing to grow, and we're sort of becoming too expensive not to buy it from them. So we've exercised, the rest. We've bought the rest, the 49%, and we've now included it into the Easy stable. Crypto for me is going to play a much more significant role in the future of assets, not just in cryptocurrencies, but in the way that we tokenize assets and own assets across the spectrum. And this gives us the technology and the platform and the capability to be able to play more meaningfully in the crypto space. And I think this is going to be a very big part of the future of the group. I mean, if you look at comparative businesses that have raised money in South Africa recently, Valor is a good one. They raised at about I think it was a 3 billion rand market cap for a business that has about 150,000 customers. Well, our little crypto business has got 120,000 customers already, and now that we own 100% of it, maybe we'll put some effort to growing it faster as well.
How much do you pay for something like that, given that crypto is such a hot asset class?
We paid 61 million for the remaining 49%, so kind of enterprise value of 120 million. We got the first half for free. So essentially, we ended up buying the entire business, if you like, for 61 million rand for a business that has, got I think 600 million in assets under management. It's the largest index of its kind in South Africa. We've set up a custody solution, which is first in South Africa, and we're waiting for the JSE to be able to list this as an ETF. So lots of growth opportunities for this product in the market.
That's a very good price. For those, the uninitiated, it's on a price to earnings ratio of well under 10. I haven't got my magic calculator in my head right now, but if you, in the past 6 months, generated, I'm just having a look at my notes here,
We
Easy
generated
Crypto,
4.5
four
million
and a
in
half
profit, so
million, to make it nine.
annualized at 9. Yeah, and
So
we paid 61 million for the whole business.
Michael Jordan's usually much smarter than that when he sells assets. Was this locked in sometime in the past?
No, so I mean, it was look. You got to understand, we are the distribution, so that gives us kind of power in the negotiations because they can't say that they own the distribution. The customers are ours. We never handed the customers over to them. So at the end of the day, that gave us the ability to discount the business. But Michael and Earl are they're fair businessmen, and in the outcome, both parties got what they deserved. And I think if you got Michael and Earl on the show, they'd say the same thing. We're very happy with the outcome, and so are they, and really look forward to taking this business forward with us into places like Philippines and Kenya.
So they had an idea, they created a product, you distributed it, and they got 60 million bucks for their trouble. Not bad.
Yeah. And we settled them in purple shares at 2.50 rand.
Aha.
They've taken all of that value in shares, which shows their commitment to the group. Michael is already a significant shareholder in Purple, so it's wonderful to have them as shareholders. They're mentors and mates, and now shareholders. And so I really look forward to continuing to build the business with them. They're not going to step away just because they've sold.
Charles, that share price, many of your clients are shareholders in Purple. They've seen it go way over 3 Rand a share. I see it's down 4% today. Presumably someone's not happy with the financial results. How often do you watch it?
At live, I didn't say daily. I mean, it's hard not to when your business is you know all about share investing. So I log onto my platform every day, and that's obviously my biggest holding. So I get to see it every day. But frankly, the share price doesn't influence our decisions. What we focus on really are the metrics that we've talked about: customer acquisition, asset acquisition, products and services, new regions, cost of servicing. If all those metrics are going along the right way, then the share price will look after itself. And for those that sold the share today, I think they're going to be disappointed in 6 months' time. This it's in an exponential business. You go through phases where you've got to take on more costs. You can see that in our income statement. We've taken on more costs in this period, but that's in anticipation of more scale. Telcom and Discovery still got to go live this year. We're building new products and services, still got to go live this year. Those things you can't do. We're a 120-man team. Can't expect us to do everything with just that small team. So we've made two very senior hires, which I'm so happy about. Nicola joins us and Rish, and I think they're going to add extraordinary talents to our executive team. But below the executive team, I think we've got like 28 job applications in process at this stage. So business is scaling fast, and this income statement is showing a little bit of that, and the revenue will follow.
Discovery Bank and Telcom, those
Can't wait.
partnerships,
Yeah.
what are they going to be, or how can you give us a taste of what they're going to
Yeah,
look
so
like?
Discovery Bank will be right inside the banking app. So for the Discovery customers, if you flip between your cards and your different accounts, there's just going to be an EasyEquities account right there for you to invest through and in. If you're already an EasyEquities customer, you'll just be able to link your account. And if you're not an EasyEquities customer, you'll be able to open an account right inside the banking app. And as you can, I'm sure you can appreciate, Discovery are going to do this really well. It's going to link into all of their programs and initiatives. So looking forward to that. And then Telcom, we're going to be inside Telcom Pay, which is their kind of, their take on, if you like, Alipay or VodaPay in South Africa. And you're going to be able to buy shares right inside Telcom Pay.
So how does Capitec feel about you doing the same thing with Discovery Bank?
Yeah, Alec, I think if you buy into democratization, as Capitec does, you've got to realize that it's going to be one in partnership with a whole lot of institutions who all believe in the same things. I think the economic outcomes that we are creating for the country, everyone benefits from. And Capitec believes that, and so do Discovery, and so do Telcom, and us, and many more partners that will follow. And that's the key. You can't own democratization. It's something we're going to all do together. And 100 years from now, someone's going to say, "How did we create all this wealth?" And we're going to say it was in partnership with EasyEquities, and we're all going to take a piece of that, which is really what we're working towards.
It's an interesting philosophy, something similar to the question that Reed Hastings at Netflix is always asked every quarter, but what about others who are coming into the streaming service? And he said, well, the market is so huge, or the potential is so huge, that we don't really worry about our competitors. Are you still with that mindset? For instance, Shift are doing pretty good work now, also coming into selling equities in the US, also making it easy to transfer your rands into dollars?
Hmm. Look, I think in the South African context, I think the competition is quite thin. Shift is there, but I'm not really sure what their focus is, whether it's FX or shares or other markets. We've been building our business for 7 years, and we're going to launch European shares and UK shares this month. We've already got Australian shares and South African shares and US shares, and so the competitive moat is quite wide in South Africa. But we'll keep a good close eye on Shift. The market opportunity is obviously much more significant than just two businesses owning the outcomes. I think for us, the real threat is going to come from international. Some of our competitors internationally are scaling very fast, and they're not far from here. There are guys in Africa that have raised a lot of money very recently that have got a stated intention to come into our lane. They want to do investing services. So hopefully we can partner them, but to the extent that we can't, we'll compete with them. And competition will just drive the best outcome. And, the winner, there will be a winner takes all, I think, per region. I don't think that there will be 5 fintechs that share the cake. I think it'll be one or two that own the market opportunity. And for now, we've got an unassailable lead, but we mustn't get complacent with that. And we certainly must go to other markets and start building our products and services out in those regions too.
Were you ever frustrated when you were telling the story and people said it isn't going to work? Now you say an unassailable lead, and clearly it is. When you have a look at the accounts that you've opened, the enormous army that is there supporting you. But back in the earlier days, did it frustrate you that maybe not everybody was getting what you were saying?
Alec, it was interesting. anybody that bothered to listen to us, one on one, and really engage us and experience the platform, every single time the outcome was this is going to work, and it gave us so much confidence to carry on doing it. It was the outsiders who stood away, who never bothered to engage us, never bothered to use the platform, who said, "Oh, it's never going to work because stockbroking's never worked." But they never looked, they never saw how different it really was. And I think you had that experience. I remember the first time you opened your account and you're like, "Oh my word, this is just so easy. Like, really? I just opened an account and US shares and Aussie shares." And so I think for anybody who bothered to look under the hood, it was obvious that it could work. It wasn't going to be easy, and it hasn't been easy. So I guess it was frustrating from the outside, but for us on the inside, every new customer just gave us the more momentum to believe that the things that we were doing were right, and that it would, if we just stuck to our guns, it would work. And it seems, with hindsight, it looks relatively easy, but this has been a long, hard journey for us.
It has indeed. I heard a stat today which did disturb me a little, that there's only 1 million people in South Africa who buy books. 1 million people. There are, what, 130,000 people who provide something like 27% of South Africa's personal income tax. So this disparity, this massive market of people who don't read, don't earn a lot of money, and as a result are kind of on the back foot when it gets into becoming your customers. And yet you've got nearly 1 million people, well, 750,000 people already who've opened accounts. How much further or how much greater can you see yourselves expanding?
So our target is to get to 4.5 million customers in South Africa over the next 3 to 5 years. And really, what gives us confidence that we can do that? Let's just take something like mortgages. There are about 4.5 million mortgages in the country. So anyone who's got the wherewithal to buy a house has certainly got the wherewithal to come and buy a share portfolio. So for us, that's the kind of the first line of runway. We think our responsibility is to get to every South African, but let's start by getting to the first 4.5 million and then worry about the rest. The benefit of these distribution deals is they take us to places that we can't afford to go. So if you think about Capitec with all of their branch network, we could never set that up. But it takes us right to the homes of a whole lot of rural South Africans that we wouldn't be able to access through traditional channels or online channels. But the real runway in South Africa, 4.5 million customers over the next 3 to 5 years, and I wouldn't bet against us getting to those numbers. Beyond that, the runway starts to thin up a little, but you've got to remember that we could keep adding products. We keep adding share of wallet over the next 3 years and beyond. And then if we get one of these international markets right and produce another South Africa in Kenya or the Philippines or Australia or in Europe or wherever we go, then, we create another EasyEquities. So we've got a lot of quivers, a lot of bows and quivers to fire. So I'm confident that the runway is much bigger than we can even predict, and I think that's the thing about exponential is even management can't believe how big it could get.
Just to close off with, you are now partnering with Discovery, and what Discovery have done is invested, as you well know, in new projects all the time, innovating, innovating. Not all of them work, but a lot of them have. In your case, when I have a look at these financial results, Rise, or your retirement option, that's making money. Easy Crypto, that's making money. Easy Properties, you talk about how rapidly it's growing, but you don't say anything about whether or not it's making money. Is it at break even yet?
No, it's not. It's when I say it's losing, it's probably losing full year results, probably less than R1 million, so small money. But really, the focus again is just on that headline growth. Getting people comfortable with this new asset class that they've never owned before, adding it at the right pace, and extending it to other markets. So we've just done our first industrial property this week. So all of the rest have been residential. See how that goes. Going to do our first international property soon as well. So it's a business that we're not in a rush to kind of pull off. You've got to remember, Easy Crypto was founded in 2017. Rise has been around. I think we launched Rise in 2020, so it's been around. No, 2019. It's been around 3 years. Easy Properties is the newcomer to the group. It'll be profitable this time next year, no doubt. But really, it's about understanding the sort of the desires of our customers and developing products and services that service those customers' needs. And they're leading us to so many other product ideas. I mean, with yield rates going up, I don't know if you've seen on Twitter, lots of our customers saying we need access to bond products. Well, it won't be long before we fractionalize access to some bonds. and who knows what's left. We've got got so many products and services to fractionalize. These are just the ones we've done so far. At some point, I can see us fractionalizing mortgages and allowing customers to fund other people's mortgages and disintermediating the banks completely. But yeah, not this year.
What have you got, or what new products, or how many new products, if you can't really tell us about them, have you got in the pipeline for the rest of the year?
We've got five for the rest of the year. So the three that I mentioned: Easy Life, life insurance, the lending product, and then Easy Crypto version 2. Then we've got Easy FX, which, as you know, you can do FX on the platform, but we partner with the bank. So we're getting our own FX license. And the reason we want to do that is we want money to move in real time across the platform. And we're adding euro and sterling stocks. So that'll be another destination for your money. So money must move quickly. And then the final one is Easy Retire. Now, Easy Retire really is just a platform dedicated to answering one question. I want to retire safely and just take the noise away from all of these products and services that you offer and just focus on helping me retire safely. Those are the five that are lined up for this year, which is a tall, ask of the team, plus those regions I talked about. So if we miss it, I guess we'll get three or four right, and maybe one delayed till next year. Next year, some exciting products I think the community are going to love. Easy Ventures early next year. Personally, I think that's one that can radically disrupt the venture capital market in South Africa. Um, what else? That's about it for now.
Is that going to be a drain on your profitability?
All of these things will reduce our profitability. There's no in their startup phase, but if people believe that we can replicate the success we have in Easy Crypto, and Easy Properties, in Rise, in EasyEquities, then they've got to take a long-term view on these businesses and that the investment is worth it. I mean, let's just take something like Easy Properties as an example. In terms of drain on our income statement, I think total drain on the income statement has been about 5 million rand since the startup cost of it. To start a business that now has 60,000 customers, I mean, that's nothing. Somebody would walk in tomorrow and say, "Hey, Charles, I'll take that business off you for 50 million rand with that customer base." So yeah, they're going to reduce our profitability, but a drain on the income statement? No, I think they're just great investments in our future.